Joining in on the show today is Mahesh Patil, co-CIO at Birla Sun Life Mutual Fund, and Sandeep Wagle, founder and managing director at Aptar Technical Advisory Services.
In the morning we'd be walking to trade, global cues were very strong and very supportive. Emerging market currencies had stabilized. Last night Dow had a decent day. Most of the Asian markets were trading with a positive bias, and rupee also appreciated with the first tick. So the fact that bulls today struggled to put a decent day together despite strong global cues, it just means that the concerns are not global, they are local. Today the news flow was not bad at all. ICICI Bank numbers in line with estimates. State Bank of India QIP got oversubscribed in the first 24 hours of trade, and despite okay news flow for the banking sector, the bank nifty was down. I guess the bottom line here is that flows have reversed, markets have lost momentum, there is no correlation trade, and handful of stocks are really exhibiting some degree of momentum. So the price action, the stock action and the market mood for 2014 is dramatically different from what we saw in 2013, and I think the fact that market is not reacting to good news and it is overreacting to bad news, that is a sign and a harbinger of weakness.
Sandeep, would you agree with that assessment? We're overreacting to the bad news. I mean, no apparent reason for really cracking the way we did in the session, 6150 not even being held on to, and this after seeing an exaggerated fall for the past many days. How are you approaching the index at 6120 with banks absolutely not supportive?
Aman, I would tend to agree with that assessment. At higher levels, we are facing some kind of a, I will not use the word sell-off, but yes, some kind of a profit booking. That is a better way to define this move. I don't expect a 200-300 point in the Nifty downside from the current levels, but I am expecting at higher levels 6150, 6160, were it to go, it will not sustain. And on the downside, once 6100 is taken out, 6050, 6030, that is the level I am looking at. So broadly a 100-120 point downside. And this is not a market where you can sell at any levels, or it has a stock specific market. You will have to wait for your levels to sell. You may not get big moves. So in that sense, I would talk of the Nifty drifting down, not crashing down.
Sandeep, so what kind of levels do you think Nifty could move in, let's say for next 15 days? What could be the two broad signposts?
Nikunj, 6,000 looks like a very strong support. Once 6100 is taken out, I won't be surprised if 6100 is taken out. But 6,000 I think should not be taken out. It should hold over the weekly basis. Maybe 5980 happens intra-week or so. And on the upside, 6200, 6250. So broadly 6,000, 6,250, that 200, 250 point range is where I think the Nifty should not be able to breach either on the downside or on the upside over the next at least a couple of weeks.
Let's take a look at what Maruti Suzuki did, and after yesterday's bloodbath, it did manage to rebound. Remember, it lost out something like 5,000 crores in terms of market cap. Clearly, this issue got most of the investors on tenterhooks, but today, quite a few brokerages seem to be lapping up the stock. Mahesh, let's get in your assessment. 1673, that's where Maruti shut shop today. As a minority shareholder of the stock, are you happy with the corporate governance standard?
Issue there are certain concerns I think which still would remain in the mind, because one would like to have a very simple structure where everything is there in the 100% subsidiary, so the minority shareholders are assured that whatever growth comes in, it happens over here. Now with two different entities over there, there will always be an element of doubt in terms of how the transfer pricing will happen, how the future investments, where it will happen. I think those issues would still be there. I think that would have some impact or derating on the PE multiples of the company, I think, which one has to really factor in going forward.
Dibin Choksi, when markets fell on Monday, everyone blamed it on Argentina, some blamed it on Turkey, some called Brazil to be the big black cat. But today, global cues were decent. Indian markets ideally should have gone up. The local news flow also was encouraging and stable. Why did Indian markets go down? Why did we see a big sell-off in the last 1 hour of trade?
Well, because what I see is that I think some of the heavyweights, particularly led by the commodities, I think have gone down today. And that's where I think the pressure was probably seen in the index, I think largely coming from the Reliance side. Where the Reliance probably cracked below 840 levels today, and I think it has gone down under and closed at lower levels. I think largely that is responsible for bringing the market down. Along with that, I think we have seen fall into Tata Steel also. So it's commodity-related fall, I think, that we are seeing. Now, one is not totally sure as to, I think, what has prompted the commodity-related fall at this point of time. Because I think any kind of tapering effect due to the FOMC meeting and all, I think is unlikely to have material impact coming onto the commodity prices into the global markets. But I think probably the market needs some reasons to get corrected. I would think that I think market holds good chance to bounce back in coming days. And that's why I think my strong belief is that I think somewhere on 6100, 6050 range, Nifty would probably take a good support and bounce back from that level. We are probably, I think, in a good force at this point of time. I think to see the market going up, then going down, I think in current fall, I think it is a buy opportunity as I see.
As pointed out, we're highlighting some of the top factors that we'll be watching out for. It is a fairly busy day across the globe. It'll be the outcome of the FOMC meet. That perhaps will be, a guiding light in terms of the direction that the global markets and our own markets take. F&O expiry, it's bound to be fairly volatile this time around. Key earnings from the Nifty 50 companies, it's Hero MotoCorp up first, which will be declaring its numbers. Apart from that, Voltas and Arvind too are set to put out their Q3 scorecards. And clearly, Nikunj, I think its implications from across the globe maybe were not influenced every single time, but it is a pretty important benchmark.
Everyone has opinion on tapering, So will 5 become 10? Will 5 become 15? Well, my sense is if 5 becomes 10, it's all right. 5 should not become 50, which means the quantum of taper should not increase dramatically. Up until now, we've seen the importance of an FOMC meeting. It's always a make or break event for global financial markets, not only for India, but global bond market, global equity market, and emerging markets. But this time around, I think that excitement, that suspense factor is missing because markets know that US FOMC, US Fed cannot afford to really do anything silly which will jeopardize really the US economy, because the US economy is still bumping along, so to speak. So I think if the communication is on expected lines, tonight's FOMC meeting may just end up becoming like a routine meeting, because in the last 2 or 3 instances we've seen that FOMC has had a big impact on financial markets. Who knows, if the communication is okay, it could just be a zero event for the markets.
Yeah, but of course that is something that we will be keenly monitoring. So Mahesh, let's start off from you. What exactly is it that you think we can expect from the US Fed?
Well, as you rightly said, we have seen the RBI policy, which was expectations. I mean, they surprised the market because of the rate hike. I think to a large extent we don't expect any increases in the near term. So I think that one overhang is out of the way from the market standpoint, and the bond deals have already reacted to that. I think FOMC is another big event which is here today. I think one has to wait and see in terms of the data which has come in from the US, whether they will go in for the further tapering. I think that should also not really matter too much, because I think to a large extent I think market has already factored that in. I think clearly from our market standpoint, I think clearly what will be the driver in the near term would be elections. I think that will be a big event. And that's where I think after this global thing settles down, I think that's where the focus will come back, because I think that will determine in terms of what kind of a recovery we are looking at in the domestic economy. And up till now, some of the domestic cyclicals have still been under pressure. It's been the global cyclicals sectors which have actually done well. So I think that's a big event, I think, which market, and until then I think market would remain pretty much range bound.
Devan Choksi, apart from F&O expiry and the outcome of FOMC meeting, we have Hero MotoCorp numbers tomorrow. Now, Bajaj Auto came out with good set of numbers. TVS has delivered. Do you expect the same from Hero MotoCorp as well?
Absolutely. I think going by the volumes that they have produced in the last quarter, probably I think one is very sure about the top line performance continuing for the company. And at the same time, I think even though comparatively less, but I think the performance on the profit side also, I think for Hero MotoCorp, I think could be on a higher side as well. So certainly I think the two-wheeler space has delivered in this particular quarter, and I have no reason to believe that this particular would not apply to Hero MotoCorp as well. So certainly looking forward to, I think, better sets of numbers on expected lines for Hero.
Yeah, that'll certainly be watched out for as one of the big benchmarks. Sandeep, let's talk about the overall pharma basket. That really exhibited strong moves. After 3 straight days of declines, you saw some activity kicking in. You had the likes of an Aurobindo Pharma, which did fairly well for itself. How is it that you're approaching this basket?
Well, Aurobindo Pharma is on a roll, Avan. I mean, I have been a buyer over the last so many weeks and months, and as a position trade or an FNO trade, this stock really outperforms. I had a buy in it today also, and I have a buy in it at this level at 440. I see levels beyond 460, 465, so I would play for a 5-7% trading upside as well. Talk of the little longer term, I have a view beyond 530 or so, but that would be for the next few months. So any bit of a correction, I am comfortable buying Oro Pharma and hold on till it reverses. There is no sign of any reversal for the past so many days. And I would hold on, I would catch a big move, and this big move could be at least a 12 to 15% from the current levels as a trade.
I want to revisit State Bank of India, because State Bank of India, the QIP was oversubscribed, and the QIP is a big QIP. It is about 9,000 crore plus. The way to look at banks is that you always look at price to book. Now, Government of India has increased their stake in State Bank of India about a month ago via private placement. The State Bank of India has raised another 9,000 crore via the QIP route, which means the book value for State Bank of India will go up. So if the book value of State Bank of India has gone up, why is the stock down?
I think the overhang on the stock clearly remains with the rate hike which has taken place and the subsequent resultant, I think, provisioning which would come into the books. People are not very sure, analysts are not very sure about, I think, the kind of a provisioning that would come up in the books in this particular quarter as far as SBI is concerned. But if you ask me, I think this could probably, I think, a brilliant opportunity for a kind of a bank like SBI, because on one side the RBI governor has very clearly indicated that I think rate hike season is probably ending now, and going forward I think one could look for the fall in the rate of interest. Along with that, I think if we start seeing the easing pressure on the inflation, I think it would get more and more confirmed. Plus, I think the amount of activity which is happening in the economy, I think it is only expected to pick up going forward. So the loan book portfolio of most of the banks could also go up. Given that kind of a situation, and given the fact that I think the bank is quoting at just one-time price to book value, I would think that I think it becomes an opportunity. I think most of the negatives are probably priced in. It's a question of, I think, long-only funds acting into the market and probably buy into the stocks. If I read it properly, I think after this QIP, probably the stock price should start going up. I think because they were knowing about the QIP taking place, that's where I think the stock price remain under subdued terms. But I think hereafter it should start going up. That's all my take is.
Sandeep, OMCs were pretty active in today's session. Do you think that the uptrend is intact for names like HP, BP, IOC?
Aman, absolutely yes. In fact, we had a buy in IOC in the morning, and I would still talk of further levels at 236. IOC is set to go all the way to 245, 250. So I would talk of a 7 to 8% trading upside, and for all you know, it may even outperform that and go beyond that.
We're highlighting some of the top stocks that you should be keeping on your radar. First up, let's find out what exactly the dealing rooms are talking about. 3 straight days of a drubbing. Pranay, run us through what the dealing rooms are advising now.
Well, Avan, even though we've had a sullen closing on the bourses ahead of US Fed's QE taper meet and announcement, and the sentiment still largely remains skittish and cautious, dealers are indicating of a positive stance on 2 stocks, Gujarat Pipavav Port as well as Havells. Now, Gujarat Pipavav Port has snapped its 3-day decline, and we are seeing HNI accumulation building up in this counter ahead of the quarterly earnings. The October to December quarter is a seasonally strong quarter for it, and that is why volume growth for this counter is expected to be higher than the industry as well as peers such as Adani Ports. It had added a few shipping lines to the business, and that is why the container volumes as well as bulk cargo volumes are expected to show market share gains. And because the favorable cargo mix as well as product mix in containers, we are expecting margins and realizations to stay steady as opposed to the contraction we had seen in its peer Adani Ports, and that is why dealers are recommending a buy on this. They see it scaling to levels of 65 where it had earlier corrected from. On the other side, you have a Havells, which the third quarterly earnings have come out better than expectations, and on a standalone standalone basis, we've seen a profit growth of nearly 27%. Margins also have expanded by 100 bips year on year. And if you look at Sylvania, which had earlier been an area of pain, that is showing good signs of turnaround both on the margins as well as profit level. And that is why dealers are recommending a buy on this one too. They see it climbing to levels of 810 in the next 2 to 3 sessions.
Right, Pranay, thanks a lot for that. Sandeep Wagle, what are your trading ideas for tomorrow morning?
Nikunj, I would go with a buy in Oro Pharma, stop loss of 434, target of 453. The second call is a buy in a BHEL, stop loss of 167, target of 179. And on any bit of an up move, I would go short in the banking space at higher levels. I would sell an IndusInd Bank with a stop loss of 386, target of 368.
Mahesh, at the current juncture, what are your tactical and structural ideas, and how are you shaping your portfolio so that it's geared up for an election event?
Yeah, so I think clearly, I think from a near to medium term perspective, we still remain positive on a lot of companies, export-oriented companies, because we believe that there has been a revival in demand in the developed markets, which should be good for some of the export-related sectors. And rupee at these levels also offers some kind of a competitive advantage for these sectors, and there is greater amount of visibility and growth earnings at least for this year. So that's an area where we still remain overweight stocks like in sectors like IT and pharma. Clearly underweight on the classic defensives like FMCG, where we see some slowdown in growth and valuations also at pretty elevated levels. So we don't see any big absolute upside in this sector. And I think slowly as we move forward, as I said earlier, we are looking at a recovery in the broader economy, and as with elections around the corner, I think that could be a revival in some of the, in some sense, for the investment climate, which has taken a big knock in the last 2 years. So I think we have slightly built a portfolio slowly and gradually towards the cyclical sectors, which includes banking and financials, to some extent the capital goods sector. But again, not really going overboard over there. I think selectively stock specific, because especially in the cap goods sector, only at companies where the balance sheet is pretty strong, and because still I think there is a lot of stress in terms of companies where there is high leverage.
Devin Choksi, between ICICI Bank and State Bank of India, which stock has a better potential to outperform?
From a market perspective, I think clearly ICICI Bank should outperform. I think the SBI continues to have an overhang of the provisions, the non-performing asset provision, and at the same time I think the bond portfolio provision on a mark-to-market basis. But whereas I think ICICI could possibly have a better performance to talk about going forward, given the kind of a growth that they have achieved in Q3 numbers, and at the same time I think the amount of provisioning coverage that they have increased, I think it builds larger amount of confidence for ICICI Bank. So probably I think it could perform better as I see it. If I have to put it across in a shorter period of time, this company, I think ICICI could be doing better.
Okay, we'll leave it at that. Thanks so much then for joining in today on the show, gentlemen, and running us through your market opinion.